We're live. How you doing, friends? Ernie here. Today's video is about how to make or create consistent income trading options. And this video is actually for not just, well, let's just say this. You don't have to be an experienced trader or options trader to do this and do it on a consistent basis and outperform your peers in trading consistently. Also, you don't have to be sitting in front of a computer screen all day, all night, doing endless hours of analysis, etc. As a matter of fact, this is one of the easiest ways to make money consistently. And the reason you're able to do that is that you're taking advantage of certain things. Now, this is not to say that getting up to speed with this method is trivial. It's not. There are a few things that you need to learn, so let's be clear about that. But once you learn them and you practice them and you're consistent with them, trading options in this manner and making a consistent income. Now, when I say consistent income, well, I'll get into it in a little bit. What we'll do is we'll go through a little presentation. So here we go. Making consistent income trading options. This is really a how-to. I'm not going to go into all the details, obviously. It's going to be a relatively short presentation. All right. So as I said, you probably think this involves some sort of crazy system with complex math, statistical analysis, and suited only for professional traders. Well, you'd be wrong. So wrong. In fact, what we do is we leverage all of the complex math and statistical analysis for you. You just need to know, in the same way that you don't need to know how a combustion engine works in your car and all the electrical systems and computer, you just need to know how to drive the car. And you can become a very good car driver in the same way you can become a very good options trader. This method is simple and consistently profitable. You just have to learn how to do it. And anyone can do it, whether you're completely new to trading or have been trading for a long time. Now, I want to be clear that if you're new to trading or even new to options, there's a little bit of work that you have to put into this. And the good news is that I have a course. It's more like a series of lectures, coaching, and mentoring, where you'll be coddled, handheld, not just by me, but by hundreds of other traders who are more than willing to help you out. 24 hours a day, 7 days a week, there for you in your own private area. So there's no way getting around this. As a matter of fact, I'll make the guarantee that if you don't start making consistent income after a month, I'll just give you your money back. All right? It's as simple as that. It's not hard. You put a little bit of effort into it, and you can do it. So this method that I'm about to reveal may not be exactly what you're expecting, may not be anything like what you're expecting. And it's probably not what you think you need to do to be successful. As a matter of fact, there is just 4 simple steps. And it's all based on a clearly defined edge, which I'll show you, using statistical probabilities and a very, very simple method. And like I said, you don't need to know all the crazy math and everything else behind it. You just need to know the basic concepts, how to put on these trades, how to adjust them, and how to manage your profits. That's it. This system is by design. Clearly, I use the term anti-fragile. In bad, it actually does better. Using this system in quiet markets, it's okay. It's easy to follow along. But even in tough markets, this system is a breeze to trade. As a matter of fact, as the markets get more and more violent for most people, this system actually makes more money, and you don't do anything different. Pretty much the same deal day in, day out. So here's the 4 steps that are involved once you know the system. We only trade select liquid stocks. So it's a small list that I use, about 20 or so. I may, at some points, add a few, subtract a few. We only trade small, but we trade often. Now, when I say often, I don't mean a huge amount. As a matter of fact, like I said in the beginning, you're not going to have to spend but a few minutes a day to actually, monitor those trades or put on a trade or take off a trade. Seriously. Now, you can spend all day and watch it, and watch your money grow and see how things are going, but it won't be necessary. When I say trade often, you'll be managing maybe over the course of a month, you'll put on 10, maybe as many as 20 trades. Not a lot. You'll be using a few well-known strategies. If you looked up option strategies, everyone knows about them. They've been around for ages. They have funny names. And you'll know which ones to use when. And you'll only be trading things that have a very high probability of success. And you'll be able to see exactly what that probability is. And as long as you stay within those bounds, you're going to be consistent. And this is, again, not rocket scientist. It's right on your platform. The number's right there. You see it. In the course of, if you've taken the course, I supply all the trades for you that are all based on this probability to get you up and going. Once you see this method going for a couple of months and you start getting good and getting that execution skills down, you won't need me anymore. But I guarantee you'll want to hang around anyways. All right, so let's go a little bit deeper into this. Here's the list that we're currently using. All very well-known things. I tend to lean or slant towards things that have natural resources in them. But, we have, now right now this is all listed in no particular, well, it's in a particular order, but nothing that you have to worry about right now. But we have things like natural gas, silver, the VIX, the Russell 2000, gold, various sector ETFs, such as consumer staples or materials, commodities, technology, communications, gold miners, the S&P 500, all of this stuff. We don't trade China that much. We try to stay away from that, although it is on the list. So, as well as oil, bonds, all of these are stocks. They're ETFs. They have certain things in common with each other. They're highly liquid. That means that they've got a lot of volume and a lot of people trade them every day. They also have a fair amount of volatility associated with them. Those are the things, those are the target types of things that fit perfectly within this method. And so what we do is we wait for these to sort of set up or maybe bubble to the top of this list, and they become our most favored trade. And we'll end up probably trading all of these in the course of a few months, but you'll see some appear over and over and over again, depending on the way the market is acting at that particular point in history, or how volatile it is, or what's going on. It really won't matter to you. They'll come up, and you'll trade them over and over again. So I said that you need to trade small. That's very important. Trade small and trade often. Super important, because this is the market is like a casino. Casinos have an edge. a very well-defined edge. Every single game that you play, whether it's baccarat or roulette or blackjack, they all have a defined edge. And the casino knows that if you just play a few games, there's a chance that you will win and a chance that the casino win. It's probably close to even, a little bit in the casino's edge. But they know that as you play more and more and more, that the edge grows in the casino's favor until you play a certain amount and the edge is 100% in the casino's favor. This is exactly the same concept that happens with this strategy. You trade more, you trade 10, 20 positions a month, and you have put the edge 100% in your favor. If you only traded once or twice or maybe 3 times a month, it's kind of a coin flip. You'll still have an edge, but not as big. If you make sure that each one of these trades are very small, and I use these capital account sizes as guides, and you trade anywhere between the 1% and 5%. 10% is maybe reserved for very specific types of trades, but we don't really go there that often. If you trade between 1% and 5% each position, and just do this over and over, you're going to make money. Hands down, you are going to make money. Doesn't matter if you start with a $2,000 account, a $5,000, $10,000, a $50,000, $100,000, even a $3 million account. You trade with these sizes in mind, with each position size, you will make money with this system. So the strategies we use are the ones that you see all the time. We don't really trade the most basic long call or long put. But we trade these what's called multi-leg strategies, like a butterfly or a condor or a straddle or a strangle, or just a simple spread. We typically trade with credit. In other words, the spreads don't necessarily they benefit from being more of a seller of premium, and that may or may not mean anything to you, but if you go back to some of my previous videos, you'll see what I'm talking about. They benefit from being more of a seller of premium. And there's part of what we talk about, our edge, that gives you a definitive advantage by being a seller of premium. Premium in an option grows when volatility grows. And if you go back to some of my, I think it was 2 videos ago, I talked about what that edge, maybe 3 videos. I talk about exactly what that edge is. And if you go back, you watch that, you'll see. So very well-known strategies that we trade, and we do them over and over and over again. Now, the last thing I said, here, we go back to here. We say only trade select liquid stocks. We trade small and trade often. We just covered that. We trade a few well-known strategies. And we only trade things that have a very high probability of success. So we do a number of things to make sure that we have only trading things that have a high probability of success. The first thing that we do, now when I say a high probability of success, we look at the chart. We may introduce a little bit of technical analysis like volume profile, which I don't even consider technical analysis, but if you looked at volume profile, the profile itself is a normal distribution. And so if I were to overlay a normal distribution curve onto that, like this, you can see that it is in fact a normal distribution. It roughly follows that along. All right? And in a normal distribution, these 2 main areas right here, that's where 70% of all the activity is happening. And so within a period of time, we have a fairly good idea, a very high degree of probability of where we know price is going to go. Now, it's not so important that we know where price is going to go, but our strategies are designed as such that we put this distribution of price movement into our strategies, and we pick them based on the degree, the amount of time that we give, and the amount of dispersion that we think will happen according to these laws of statistics, this normal distribution. Now, you can see this on your platform. This is ThinkorSwim. Each one of these lines, these rows, represents a contract in the ETF XLE. That's the energy ETF. And it gives you all the different strikes, the prices that you could buy these options at. And it also provides a probability of being in the money or out of the money, I guess an inverse way of saying in the money. And that's what this column is right here, the second column from the left on calls, and the second column from the right on puts. Shows you the actual odds that the market is placing on it being out of the money, and the inverse to that would be in the money. All right. You can see if you're familiar with options, then you know that the lighter blue area are in the money option contracts, and the ones that are in the darker area are out of the money contracts. Anyways, these are individual contracts, but you can see that the platform will tell you this right away. Now, ThinkorSwim doesn't do a very good job at showing you what happens when you create one of those strategies where it's more than just one long or call or one long put. It could be a combination of long and short calls, or long calls and short puts, and all different other types of things. And so it doesn't go and then show you, well, after you've combined it, what are the odds? But one platform that does, but that's not important, because you can figure that out, and I can show you how to figure that out. What are the odds when you combine all the different strategies? Or you can use a platform like Tastyworks, the Tastyworks platform. And so here's a spread that's putting the XLE on, and I've highlighted in the lower left corner, it actually shows you what the probability of profiting is in the lower left-hand corner, because it does all the calculations for you. So what I'm saying is that there are platforms out there that will show you all this. And so we can see that there is a probability of profiting of 73%. You might not think that that's very high. It is pretty high. I mean, if you traded with a 73% probability of profiting on all your trades, you'd be doing pretty good. Now, this is holding it until expiration. We never hold till expiration. And by holding it a shorter period of time, you actually increase this probability of profit dramatically. In fact, the way we trade and the method that we trade and what I'll teach you will increase. Now, first of all, we only put the trades on that at expiration are already high. We'll do this in such a way that we can increase this to 85 or 90%. So you have a 90% probability of profit on all the trades that you put on. And each one has the ability to return quite a bit of money. You trade small, and what you're doing then is you're accumulating winner after winner after winner after winner after winner, then a loss, and then a winner, 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 loss. Maybe another loss in a row. Winner, 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 loss. Winner, 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 loss, loss. Winner, winner, loss. Winner, 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 winner. All right, you get the point. That's what it's like trading this strategy. And the losses are very small. As a matter of fact, a lot of times we can adjust those losses in such a way that they are just very small losses or no loss at all. Sometimes we can turn the loss around to become a winner. But more often than not, those losses are on average smaller than any one of the winners. So, with all of this said, this is what ends up happening. Depending on the size of your account, you'll have anywhere between 10 and 20 positions on per month at any one time. You'll be holding those positions for, on average, of about 7 to 15 days. So there's no hurry getting these positions on or taking them off. As a matter of fact, it is super relaxed. We put them on, and then when it comes time around the area that we feel comfortable, we take them off. Requires no more than a few minutes a day. You can start this with as little as $2,000. As a matter of fact, I've started this my example account with the service with $2,000, and I'm going to show you how I can build that up to double it, triple it, quadruple that account over the months. And you can expect a monthly return between 5 and 15%. Now, the 15%, look, if you could do 15% every month and average that over 2 years, maybe 3 years, you would be in the elite class of traders, the 0.1% of all traders that are out there. And I'm not guaranteeing that you can get 15%, but I think 5% is easily that. If you do 5% a month, every month, or 60% a year, you are still in the elite class of traders, probably within the 0.2% of traders, making an incredible income. But I think that it's very easy, especially when your account is smaller, to easily do between 5 and 10%. If you're super good at this, I don't see any reason why you can't churn out 15%. And as a matter of fact, as you get to larger account sizes, it gets a little easier to get, slightly higher. When you're small, you're trying to cherry pick. You only, and just take the very best of the very best trades. Still trading often, and still creating good returns. So there it is. There is how to make consistent income trading options. Pretty simple. All right, now let's go back to the big head. So Scooby-Doo wants to know, are you talking about trading large amounts of trades that offer a large percentage of probability returns? When I say large amount of trades, I'm talking about 4 or 5 trades a week, taking you approximately 10 or 15 minutes of your time each day, accumulating up to about between 10 and 20 trades that are on in any one month. Then we're churning those trades over and over again, taking them off as they become profitable, and then replacing them with new trades. So that's what I mean. So in the course of a month, you may put on and take off 10, 12 trades. You'll accumulate that profit. Again, what I said, you'll have something in the order of 90% profitability. So 9 out of 10 of those will be profitable. 1 won't. And you just do that month after month after month. You get a bigger account, you can probably expand that 10 trades up to 20, maybe 25 trades. And then you can start scaling. So I don't really recommend going much more than, say, 20 trades a month. That's about what most people can manage. It's not hard to manage it. I mean, you have a list. You can see it very clearly which ones are in the money, which ones aren't. But as you get your account to grow, then what you can do is, instead of taking the minimal size of those trades, those position sizes, you can grow them bigger and bigger, as I showed in the position sizing chart. And that's it. So your job doesn't get any more complex as your account grows. It's just a matter of tweaking the size of the positions. And then instead of making, I don't know, $200 or $300 a month on your $2,000 account, you're making $2,000 or $3,000 a month on your $25,000 or $30,000 account. And so next question is, what platform are you recommending? Almost any options platform out there can provide you with basic tools to be able to do this. But I really like ThinkorSwim, and I definitely like the Tastyworks platform. They are highly graphical, have some of the best analytical tools out there, and are just once you get to know them, there is a fair amount of complexity in them, but once you get to know them and which buttons to push and what to select, they are super simple to use. Very easy to look at your accounts, your positions, put on positions, take off positions, adjust them. All of that stuff is super simple to do in these platforms. So if you have any other questions, please, you can ask them now, or you can put them down in the comments section down below. If you like this video, give it a thumbs up and share it with your friends. The concept of what I'm doing here is something I did about 10 years ago. I had an option service that I ran for about 3 years until things happened in my life that I had to actually move away from actually working. But it was going great. I was charging $395 a month back then, $395 a month, and people were paying that, and they were happy. This is literally 1/10 of that price. There's a little bit of an upfront cost just for that training, so that first month we make sure that you're up and running. But then after that, it becomes easy, and you're only paying about $30 a month for the trades. Now, if you choose not to do the training, then you don't get my mentoring. You go into a special class where all you do is you get the alerts and no one ever bothers you. But it's going to cost you $98 a month. So it's worth it. See, I want to make sure that the people that come in are successful and that they understand the methodology 100%. Quite frankly, I don't want to be giving anybody's money back if I can show them exactly what to do and make sure that they are profitable. So for that, you pay a little bit up front, and you get a huge discount going forward. That's it. Is Tasty available in the UK? I think it is. I do think it is. You'll have to check it out and go to their go there. Now, what you could do is I think you could sign up. There are lots of ways you could do this. And use their analytical platform if that's all you want to do. But I'm pretty sure it is. And I know that people are using ThinkorSwim in the UK. I think only Canada might have a thing with ThinkorSwim. But Tasty Trade, they've made it available in a lot of different international locations. You don't have to, be stuck with that. I mean, you don't have to just choose Tastyworks or ThinkorSwim. There are tons of different platforms out there that are very good. I don't provide any support on them, but I will provide support on ThinkorSwim and Tastyworks. But they should be easy enough to use. All right. So there you go. Go down below. Put this in your browser, asymmetricadvisor.com, C bundle, and you'll get the deal. And in 1 month, I guarantee that you'll be up and running, generating consistent income, high probability of success, guaranteed. All right, that's all I've got. I want to thank you very much for showing up. Please hit the like button. And look, I think what I'm going to do too is I'm going to ask for some testimonials. The service is pretty new, but the level of support, here's the big thing with this. The level of support that you're getting for this service, I can guarantee this, there is nothing like it out there in the industry. Nothing. You have 24/7 access to people in the trade room. You can call me anytime. I take one-on-one mentoring calls with any of the members that have gone through the course or paid that small little bit of fee up front. It's a small fee. And I'll talk to you for as long as you need doing screen share, direct phone or email, whatever it takes to make sure that you are successful. All right. I want to thank you very much, and we'll see you next video.